January 26th, 2024. Today we got a measure move down. That was 2 times the height of the spike or the wedge. You can see we got a wedge here. One, pull back, two, pull back, three. And we tried to get the reversal up. Bulls tried to get a reversal up 28, but it ends up failing and you get a breakout below it. And the first target when you get a breakout below is a measure move down, but you can see we raced right through it. So we ended up getting 2 times the measured move down. And that's essentially where we stopped for the day. We also got a measure move up. You can see we got a wedge here, and then a reversal up, and we got a measured move of that, and we came within 1 tick of it when we got a breakout above the wedge. Just like here, we got a breakout below the wedge. There we got a breakout above a wedge. Bar one, a big bull bar. I thought, on the daily chart, we had an inside bar and a high one. I thought that it would probably not go very far above. I thought it was essentially going to be, a bad high one, and it was going to get poor follow through, which it looks like we are getting today. There's still, traders are still fighting over the close of the bar. You can see that because if it's bull close, bulls can. Okay, so I don't think it was a bull close. Yeah, so it was a bear close. So the reason that's important is because if it was a bull close, bulls could argue that they got follow through on the high one, or at least if it was a doji close. But since it was a bear bar, you could, bears would say that it was, definitely bad follow through, and that bulls might exit below, and that could cause a couple legs sideways to down on the daily chart. So big bull bar on one, but not quite at yesterday's high. I thought we were probably going to have to test yesterday's high and go above it to see what was there. Inside bar on two. So, you could argue it's a double top with this, but I don't think it's all that good. An inside bar on three, but a doji bar. There was an argument to be made that we could start selling off, but you would need really strong bear bars to convince you of that, because this bull channel up was pretty tight. And although this was climactic, that means that we're probably going to get a couple legs sideways to down and potentially test the bottom of the biclimax, which is right here. Doesn't mean that we're probably going to get a big reversal. So bar three, II pattern on the open, potentially a swing sell, but not all that great. It's a doji bar. Follow through for the bears on four, who sold below three, but you have a big tail on the bottom of four, and you really don't want a big tail if you're selling below a bar like three. I think five is a problem too. It's got a big tail on the top and a big tail on the bottom, and the bottom of five overlaps the low of three. So traders who bought below three, hoping that this was, essentially it was a doji bar, and they were hoping that the traders who sell below were going to get bad follow through. They were potentially getting trapped on bar four. However, they were able to scale in lower, and then you can see on five, they were let out around break even on their first entry with a profit on their second. Bar six, do you buy above six? I probably wouldn't. Bears are going to exit though, and it's a strong enough closing bar to make the bears think that, we're not going to sell off strongly. So probably a trading range open. Low one on seven, but I think, after six, noticing how strong the bulls were there, and that bears already had a chance to sell off on 4 and 5, and they got big tails. And 7 has tails as well. I don't think it's really all that good. Additionally, it could be a third push. 1, pullback, 2, pullback, 3, or 1, pullback, 2, pullback, 3. A couple different ways to look at it. But arguably, it's a wedge regardless. So I don't really think that a lot of it's 3 pushes regardless. I don't think that a lot of traders are going to take the sell below 7. It's also right on the moving average. So not surprisingly, you get bad follow through for the bears who sold below 7 on 8. And a lot of those traders exited the market on 8, which causes 9. Would you buy above 9? I wouldn't buy above 8 or 9. I think 8, doji bar, not a great buy, even though it is 3 pushes down. Follow through for the bulls on 9, but really not, amazing. You wanted a much bigger bar if you were buying above 8. You wanted a massive surprise, essentially. 10, buyers below 9, not that surprising. We're probably going to go sideways to up for a couple legs, and you get a big bull bar on 11. Although it's true that you're buying kind of towards the middle of the trading range, if you're buying above 11, I think it's definitely an okay buy above 11. For one, the bears who sold above 10, they're disappointed in 11. If you were selling above 10, you were hoping to get something like this where it just triggers right above and then trades down. But instead, you got a really strong bull bar, 11, closing on its high. So I think a lot of the bulls who sold above 10 are just going to take their loss directly above 11, and traders taking their loss directly above 11 is going to cause a bar like 12 to happen, where you're going to get more follow through for the bulls. 12, follow through for the bulls. Traders who were in here stay trapped. Additionally, with 11, it closed above the extremes of the past 6 bars, which is really good. Usually you don't get trades that, bars that close above that many bars. 12, follow through for the bulls. But again, like I mentioned, trap traders, sorry, I'm a little distracted. Trap traders, so good follow through on 12, but a small tail on the top. Still enough to be long and enough to stay long, but you didn't really want that tail. I think that the thing that made me hesitate buying 12 is that we were getting close to yesterday's high. And if we get to yesterday's high, I'm not sure what's going to be there. It's not the best buy in the world on the daily chart, so I don't really want to take the buy above 12 when I know that we're very close to yesterday's high. But it's still okay to take the buy above 12. I just didn't. 13, follow through. We test yesterday's high. We end up getting, we pulled back below it. More follow through on 14. Important that the 14 low doesn't overlap with the 12 high. And something to keep in mind is when you're forming these open gaps, this is a gap as well. This is a gap as well. It could be a trend day, right? It could obviously be a trend day. But if it's not a trend day, if it's not a bull trend day, then it's probably a trading range day, right? You can conclude by the close of bar 14 that if this isn't a bull trend day, then it'll probably be a trading range day. And if it's going to be a trading range day, then gaps will probably close. And if gaps will close, then that means we're probably going to come back down and close this low, close all these gaps. So we might have to get back to maybe even the 10 high. So while this rally is, it's not the best rally in the world. There are big tails here. There's obviously big tails here. And the bars get smaller. So it's really not the best rally in the world, but it's obviously still a strong rally. While it is a strong rally, you have to keep in mind, it might end up being a trading range day. And if we start to get bear bars, you got to be thinking about the possibility of us getting here. Follow through for the bulls on 15, tail on the top. Lower follow through 16 and 17, but big tails, shrinking bodies, not all that great. And then inside bar on 18, which is a final flag. So a lot of traders exiting above 18 and bears will sell since it's a final flag. And a reversal down on 19. 19 is technically a failed breakout of the 18 bar range. So sometimes when you get that, you get a reversal into the other direction. So failed breakout of the 18 bar range on 19 and a reversal down. Do you sell below 19? I personally wouldn't sell below 19. I think that this rally is too strong to take any short. But I think it's probably theoretically reasonable, but it's just not my trade. Bad follow through on 20, which is kind of expected with how strong this is. This is probably strong enough for a second leg up, though the pullback could be really, really deep. We could easily get all the way to here before we get a second leg up. So you have to be careful holding long. I would be out of longs at the latest, totally below 19. I would just get out of longs. Bad follow through 20, like I said, and a second leg down on 21 for the bears. So 1, pull back 2. It's 2 legs down to 21. But the channel's pretty tight and the bear bars look pretty good. So it makes me, I would be hesitant to buy above anything. I probably wouldn't sell below 21. You might be able to, but 22, stalled for about 4.5 minutes before it even triggered. So at that point, I don't think there's any point in selling below 21. Traders who do take the sell below 21 see 22 as follow through and find it disappointing, and they are getting out around break even during 23. You can see that they're exiting at break even. That's causing this rally. Are you buying above 23? It's a high 2. You could argue it's technically a high 1, but you could argue 1 pullback 2, so high 2. It's not, it's not a very great buy with how tight this channel is. We're probably going to go a little lower, and we're probably going to at least touch the moving average. These strong bars make me think this might be a trading range day, which has me thinking about these gaps. Follow through 24, 25 for the bulls, but it's really not ideal. If you took a buy like 23, it's lower probability, so you wanted to see big, strong bull bars. You wanted to see this. Traders who bought above 11, they got what they were looking for. Traders who bought above 23 did not. So when you get 24, it's a bull close, so it's enough to keep some traders long, but then you get a doji on 25, and traders are thinking that we're probably going to test down even further. And so they just flatten at the market, and that causes a big bear bar on 26. 26, good enough for a second leg. And it's 1, pullback 2, pullback 3. So this is 3 pushes down and a wedge. So would I sell below 26? Probably not, since the tail. But you see what you get on 27, and you get bad follow through. And 28, you can see the tail on 28 qualifies as a second leg sideways to down. So traders maybe took the sell on 26, knowing that, worst case scenario, they're going to scale in higher, and they're probably going to make money since you should get a second leg sideways to down. Just checking something. Since you should get a second leg sideways to down like you do on 28. Do you buy above 28? I don't think so. I think this was mostly bears buying back shorts disappointed. And you're buying, the top of what's a reasonably tight bear channel. So I don't think it's all that great. Follow through on 29, but a big tail, not awesome. And follow through again for the bulls on 30, but another tail. And this isn't, ideal follow through if you bought above 28. Problem with 28, your risk is reasonably big. And, what are the odds we're getting all the way up here? Not all that great. 31, a doji bar. After this, some traders might exit, and you can see we traded above, and that was, the trading above here could be qualified as the second leg sideways to up. You get from 28 to 30. So this tail could be that second leg up. And a big reversal down, 32. Do you sell 32? I think 32 is an okay sell. I don't like that it closed. I wish it closed a bit lower, but it's probably still a reasonable sell. The thing is, 33 started to stall. After about 4 minutes, it started to reverse back up. And I think it makes a lot more sense to get out. If you can get out around break even somewhere here, or even a small loss as it's reversing up, it makes a lot more sense than to wait and exit above 33 because you take a much bigger loss. With a sell like 32, it's kind of risky. That we're probably going down, right? So you have big bear bars, huge bear bar, but bad follow through, huge bear bar, but bad follow through, huge bear bar, but bad follow through, huge bear bar. So what do you think is going to happen? Probably bad follow through. But I think it's okay to take the sell because it's overall bearish. But if you're going to do it, once you start to get bad follow through, I think it just makes sense to get out. And some traders do get out, causing 33 to rally. Some traders might exit above 33, and you get follow through for the bulls on 34, trying to run bear stops. And then you get a big outside down 35. Why? Because no bulls want to buy this close. If you're buying this close, you're buying high in a trading range, high in an overall trading range, when you know that, you're buying high in a trading range and we're probably going to close these gaps. 35 is a credible sell for a swing. Follow through for the bears on 36. It's not ideal follow through on 36, but it's different. You still have this open gap with the bulls who bought below 34, so they're still trapped. And it's the best follow through a big bear bar has gotten so far today. So this could continue down, and then you get a big follow through bar on 37. Traders sell the close on 37 now that we have follow through, and they're able to make a scalp on 38. Big bear bar with a reasonable close. Bad follow through on 39. A doji bar. A doji bar is essentially just a pause bar low in the trading range, and then a big bear bar on 40. Now, what do you think when you see 40? Well, it's the best looking bear bar, and this is a pretty steep sell-off. And you could argue that it's spike, and then you see 39, and you're thinking we're probably going to start the channel phase pretty soon. Except then you get 40, and 40 is a big bear bar closing near its low. And if this was still clearly in the spike phase, you probably wouldn't get a pause like 39. So when you get a big bear bar like 40 after a pause, it might be more of a profit-taking bar than a sell the close bar. But it's still a reasonable thing to do to sell the close. It's just not ideal. It's just helpful to understand why these are better. And this is a better sell and that's a better sell. Additionally, look at how strong this was, right? This was reasonably strong. This is obviously stronger, but this was reasonably strong. So it's probably a trading range day. So another part of your thought process should be the bulls who bought below this low are probably going to be able to get out around break even. And the bulls who bought below here are also probably going to be able to get out around break even. So when you see this big bar, it's unlikely to continue to trap bulls. Disappointing follow through on 41. Trades back to the 39 low. 42, it's a low one short, but really not all that great. I think that, you're low in a trading range and 41 is pretty strong. So we're probably going to go more sideways for a couple legs. Disappointment, 43. Bull bar, 44 with a reasonable close, but probably sellers not too far above, probably buyers not too far below. I would assume the top of the trading range is somewhere over here. We might test all the way up to this high. 46, bad follow through for, if still below 45, 46 isn't ideal. So a lot of traders exit at the close and that's causing the rally on 47. 48, essentially test the 46 high, and same thing with 49. It's three pushes up, one, pull back two, pull back three. If you're always in bear, you can sell again below 50, thinking that this is obviously strong enough for a second leg. You're not sure what the second leg is going to look like, but we're probably going to test back down. There's a little bit less of a need to since 43 did test the 40 close. So traders who sold this close, disappointed, scaled in, and were able to get out at break even. So there's a little bit less of a need to, but I think it's obviously still okay to sell below 50. And you get big follow through 51 and you're able to make 5 points during 52. Doji on 52, 53. So if you're short, not really ideal. you're hoping for a bear channel, but it doesn't look like you're getting it. And this is strong enough. This pullback was strong enough to make me think that, the downside was overall going to be limited, and that the bulls who bought below here, again, were probably going to make money, especially since the bulls who bought below here made money. So it's probably going to form some sort of trading range. 54, bears buying back shorts, disappointed, giving up. And the rest of them buy back shorts at the market, causing the rally on 55. But you're just headed to the 49 close. Bulls bought the close 49. Disappointed, hadn't gotten out of break even yet, maybe scaled in lower. And they're getting a chance to get out of break even during 55. Doji 66 or 56, probably buyers below. During 57, 58, another leg up. 59, a bear bar closing near its low. Good bear bar for the good bar for the bears, but probably not going to get a ton of follow through. You're testing right around these highs where traders sold above, and you can see the 55 low did not touch the 52 low or the 52 high. So these traders got trapped. 61, a bear bar, but it just looks like 1 pullback, 2 pullback, 3. So spike, wedge pullback. And then you get a big surprise on 62. I think it's an okay swing buy on 62. You're trying to get back to these lows where traders got trapped. So traders who bought below, 26, 27, 28, whatever, they got trapped on 37. And that's pretty surprising that they got trapped that quickly. So it was reasonable to think we were going to get back to this low. Good follow through for the bulls on 63, but kind of disappointing on 64. 63 is minorly disappointing with the tail, but still okay. The bulls who bought above 62 were able to make a little over 5 points. So minorly disappointing on 63 with the tail, but still reasonable to be long, and better follow through on still follow through on 64, but a smaller bull bar. And then 65, I thought was really disappointing how this was the low we sold off at. You can make an argument we should have gone back to the 63 low or this low. But those were kind of far. And, when you're taking buys like this, you got to pay a lot of attention to the follow through. And when you start getting disappointment like this, traders look for a quicker target to take profits at. Some 5 points, some this low, ends up being around the same area. 66, where does the tail go? Goes to about the 50% pullback. That's where bulls are interested in buying, right? When you're not wanting to buy at the highs, traders become eager to buy a 50% pullback. And this spike is reasonably strong, so traders are probably going to buy it. You can see they were so eager to buy it, they didn't even let it touch the 50% pullback. They bought before it reached there. And 66 is an interesting high one. Why? Well, if you sold the breakout, so you sold the breakout above 39, right? Or you could argue it was above here, but I think 39 is the clear top of the trading range. So you sold the breakout above 39. 66 did not overlap the 39 high. And that might be one reason why bulls bought a tick above the 50% pullback, is because if it went to the actual 50% pullback, it would close the gap with 39 and let the limit order traders out at break even. And they wanted to keep those traders trapped. So they bought a little earlier than they had to in order to try and get the market to rally. If they bought, you can see they bought below and they made a little less than 5 points. So they're not able to make 5 points. Interesting. 67. I think if you bought above 66, you're hoping to get a good bull bar and you want to get somewhere up here, and then you get disappointment 67. I think it makes sense to just get out below 67. Sometimes you'll get an outside up bar here, but I'd rather wait. And then you get disappointment on 68, just a lack of inertia for the bulls. I thought if we were going to go up, I thought after 67, there was still possible we'd go up, but I overall just thought the follow through for the bulls wasn't good. This tail was disappointing. 66, the bulls gave themselves essentially another chance, but then another disappointing bar 67. So bulls are disappointed here once, they're disappointed here twice. So they're probably going to get out. I thought it was possible on 68 that we went outside up and started to trap bulls out and get a big reversal up. But you get another bear bar 68, which just shows a lack of initiative by the bulls, just not really doing all that much. And that's why when you get a high 169, or you could argue high 269, a lot of traders aren't buying it, and you get a second reversal down 70. Some traders will sell 70, trying to get back to maybe the 61 high. And that we're probably going to close this gap at this point. So it's probably a credible sell below 70. Follow through 71, 72. You can see we don't actually test back to here. Assume these traders were able to make 5 points. They were. So they made 5 points, and then we went sideways for the rest of the day. So on trading range days, just keep in mind the gaps will probably close. On the weekly chart, I guess the daily chart first, bad follow through for the high one as expected. A lot of bulls who are long probably going to exit below this bar. So we might get, a quick sell off at some point. I would be interested to see what's going to happen when we trigger this bar. maybe 20-30% chance we get like a decent collapse. Or I use the word collapse lightly, like a bear day, something that looks like this on Monday. And a lot of times, if we do start to get a bear day, it'll get bought up. I'd be interested to see what bulls want to do at the 50% pullback, which is right around this high, the breakout point. So we could be in for a relatively deep pullback. The weekly chart, it was a bull close, so good for the bulls. Probably going to end up going a bit higher at least, but again, we might have to close a breakout point or two. This is pretty overdone. We just very, very steep type channel. Good for the bulls, but again, this is overall pretty overdone. On the monthly chart, another good bull bar, back to always in long, or clearly always in long for sure. But I'm not, I'll be interested to see what happens over the next couple of days, because with 3 straight bear bars here, I thought that this is probably going to end up being some sort of trading range. And I was kind of expecting this bar to be somewhat disappointing for the bulls. And, even if it closes like this, it's minorly disappointing. It's probably not, disappointing isn't the right word for it, but, the traders who were buying were hoping to get another big bull bar. You can see we have shrinking bodies here. So even if it closes like this, it's good for the bulls, but not as good as it could be. But I'm more interested to see if we're ever going to be able to close this gap here, which I think we probably will. And I think we'll probably get back here at some point. But I'm just really interested to see how this month is going to close, because I don't think it's going to close as bullish as it looks right now. I think we could definitely get a pullback. And the month isn't all that big. It's 215 points, but we've had much bigger months recently. So I wouldn't, we have like 3 or 4 trading days left in the month. So I wouldn't be surprised if we got maybe a 50, 60 point pullback and tried to retest this high. But anyways, that's today.